There will be quite an interesting half we've seen for the year, but I'd like to get your assessment on how we saw the market play out in the first half of 2021.
Good afternoon, Kenneth. Thanks for having me. So, well, I can sum up the markets in one word: illiquidity. In H1, the market was faced with so much illiquidity. System liquidity had the highest amount of times we've been in the repo, about a consecutive like 3 months straight. Market closed in the repo, and that's really because of so many things contributed to that part. So we've had mixed sentiments as well, more bearish sentiments as market participants have sold to create liquidity for their funding gaps. Also bullish sentiments from the auctions we've had, as market participants have also gone heavy on those auctions to take advantage of the high yields that we're seeing. So basically, like I said, in one word, illiquidity ruled throughout the H1, and we saw mixed sentiments in general.
But do you see that continuing in H2, or are there new headwinds that could come and impact the markets?
Well, in H2, in July alone, we have so much liquidity coming in. So we might say reversal in that. By the second week of the month, we will have about 561 a bond maturity in July 15th. We already have coupon payments about 240 billion coming in just from the bond side alone. At the other side of the market, too, we have about 150 billion maturing in the second week of July too, and also in the first week too. So we might see a reversal in the bearish sentiments or the illiquidity stance we saw in H1, and we see more bullish sentiments going into H2, most preferably July to begin Q3.
All right, now let's get into how the market played out this week. Interesting times we've seen, especially I'd like to get your thoughts on the primary market auction and other events that drove the market.
Well, we had a primary market auction, and for the fourth consecutive time, we saw a drop in rates from the penultimate high of 975. It dropped to 965. It dropped to 9.4, and now we're at 9.15. And this is all boils down to where we are in terms of liquidity, and making it clear that the DMO via the CBN are watching the cost of borrowing. So we've seen a drastic drop in rates, and also a drop in the amount of PMAs that were raised. About 163 billion was raised compared to the amount of figures raised the previous time, which is clearly showing you that the DMO is close to reaching its domestic debt targets in the market.
But in the medium term, though, what do you think will shape the markets going forward?
Well, in the medium term right now, everything is boiled on fundamental analysis in the market, and also where we rely on system liquidity, and also a constant, which is the CRR. So if the banks are still faced with constant CRR debits, which might pose more system liquidity in the market. However, with these maturities coming in and this bond maturity, we might see a reversal in that and more bullish sentiment. So we might probably move towards these high rates we're seeing to a bit of taper down in the rate hikes for this Q3, but in Q4 we might be back to higher yields in the market. As we all know, inflation is at a rise. I think in the global economy, we see what inflation is doing right now in the US and other developed markets. So Nigeria is not left out.
About going into next week, what are you optimistic about and what are you concerned about?
Well, going into next week, we're optimistic about the maturity, about the NTB maturities going in. And also, we're also optimistic about the bond maturity. We want to see whether if market participants will front load before the maturities come in, and also the coupon payment. So we are looking, okay, would rates drop drastically? Would market participants buy on the back of those informations? And also the release of the Q3 issuance bond calendar. That's not out yet. So those are the four basic things we are focused on. Because if that calendar comes out, we might see, okay, what exactly does the DMO have planned for us going into this Q3?